What is a bank? Simply put, a bank is an institution that safeguards our money and lends it out to others. Banks are essential to the functioning of modern economies. Understanding their history, their various functions, and how they impact our daily lives is crucial for anyone wanting to navigate the financial landscape. From the first grain loans in Mesopotamia to the rise of online banking and cryptocurrencies, the story of banking is one of innovation, adaptation, and, at times, crisis. By understanding the past, we can better comprehend the present and prepare for the future of finance. Join us as we delve into the captivating history of banks and their enduring impact on the world. So, buckle up and get ready for a journey through the intriguing world of banking. The roots of banking can be traced back to the ancient world, long before the advent of paper money or credit cards. In Mesopotamia, around 3000 BC, temples and palaces served as the first banks. These institutions held large stores of grain, a form of currency at the time, and provided loans to farmers and traders. In ancient Babylon, clay tablets recorded loans, interest rates, and other financial transactions. In Egypt and Greece, temples continued to play a significant role in banking, acting as safe repositories for valuables and offering loans to individuals and the state. The development of coinage in Lydia around the 7th century BC marked a significant turning point in the history of banking. Coins, with their standardized weights and values, simplified transactions and facilitated trade over longer distances. This innovation led to the emergence of specialized money changers, who exchanged different currencies and provided rudimentary banking services. These early bankers played a crucial role in the flourishing economies of ancient Greece and Rome. The fall of the Roman Empire would usher in a period of decline for organized banking in Europe, only to be revived centuries later. The fall of the Roman Empire in the 5th century AD led to a decline in trade and economic activity across Europe. The Catholic Church's prohibition of usury, the lending of money with interest, also hindered the development of banking during the early Middle Ages. Despite these challenges, banking did not disappear entirely. Monasteries, often seen as safe havens in turbulent times, provided some banking functions. The development of Islamic banking in the Middle East, which adhered to Sharia law's prohibition of interest, also offered an alternative model during this period. The revival of trade in the late Middle Ages, spurred by the Crusades and the growth of Italian city-states, brought about a resurgence in banking. This period saw the rise of powerful Italian banking families such as the Bardi and the Peruzzi. These families established branches across Europe, financed large-scale trading expeditions, and even lent money to kings and popes. The stage was set for a more structured and regulated form of banking to emerge. The Renaissance, a period of great intellectual and artistic flourishing, also witnessed significant innovations in banking. The Italian city of Florence, home to the powerful Medici family, became a center for financial innovation. Cosimo de' Medici, considered the founder of the Medici dynasty, established a sophisticated banking network in the 15th century. His bank, the Medici Bank, utilized innovative techniques like double-entry bookkeeping, which provided a clearer and more accurate picture of financial transactions. The Medici Bank's influence extended far beyond Florence. They financed trade routes, lent money to rulers across Europe, and even became the bankers to the papacy. Their success transformed banking from a primarily family-run affair to a more institutionalized and influential force in European society. The Medici Bank's rise coincided with the establishment of the first central banks. The Bank of Amsterdam, founded in 1609, is often considered the first true central bank. The Industrial Revolution, beginning in the late 18th century, brought about unprecedented economic transformation. The rise of factories, mass production, and international trade created a surge in demand for capital. Joint stock banks, a new form of banking organization, emerged during this period. Unlike earlier banks, which were primarily family-owned, joint stock banks were owned by shareholders. This structure allowed them to raise larger amounts of capital and expand their operations more rapidly. The Industrial Revolution also witnessed the rise of investment banking. Investment banks played a crucial role in financing large-scale infrastructure projects, such as railroads and canals. They facilitated mergers and acquisitions, issued bonds and stocks, and provided financial advice to corporations. The adoption of the gold standard by many countries during the 19th century also had a significant impact on banking. The 20th century was a tumultuous period for the global economy and consequently for the banking sector. The century began with a period of relative prosperity and growth, but this was shattered by the outbreak of World War I. The war led to massive government borrowing, inflation, and economic instability. The period following World War I saw the rise of new financial instruments and practices. Consumer credit became increasingly common, allowing individuals to purchase goods and services on installment plans. The stock market boomed throughout the 1920s, attracting millions of new investors. However, this period of exuberance came to a crashing halt with the Wall Street crash of 1929. The stock market crash triggered the Great Depression, the most severe economic downturn in modern history. Banks, heavily invested in the stock market and burdened by bad loans, failed in droves. In response to the crisis, governments around the world implemented significant reforms to the banking system. The late 20th and early 21st centuries witnessed another technological revolution that profoundly impacted the banking industry: the rise of the internet and digital technologies. The internet ushered in an era of online banking, allowing customers to access their accounts, make transactions, and apply for loans from the comfort of their homes. The advent of smartphones and mobile banking apps further revolutionized how we interact with our finances. Banking became increasingly convenient, accessible, and integrated into our daily lives. While these technological advancements brought about undeniable benefits, they also introduced new challenges and risks. Cybersecurity threats, data breaches, and online fraud became major concerns for banks and their customers. The 2008 financial crisis highlighted the interconnectedness and fragility of the global financial system in the digital age. To fully grasp the workings of modern banking, it's crucial to understand the concept of fractional reserve banking. This system, upon which most modern banks operate, allows banks to create new money through the process of lending. When you deposit money into a bank, the bank is required to hold a fraction of that deposit as reserves. This fraction, known as the reserve requirement, is set by the central bank. The bank can then lend out the remaining portion of your deposit to other customers. The borrower of that loan can then deposit the money into their own account, and the process repeats. The bank can lend out a portion of this new deposit, creating even more money. Fractional reserve banking has been credited with fueling economic growth by making credit more readily available. However, it also faces criticism for potentially leading to inflation and financial instability. The world of banking is vast and diverse, encompassing a wide range of institutions, each serving specific purposes and catering to different needs. Commercial banks are the most common type of bank. They provide a wide array of services to individuals and businesses, including checking and savings accounts, loans, credit cards, and payment processing services. Retail banks, a subset of commercial banks, focus primarily on providing services to individual customers. Investment banks specialize in providing financial services to corporations, governments, and high-net-worth individuals. They underwrite securities, facilitate mergers and acquisitions, provide financial advisory services, and manage investment portfolios. Central banks, unlike other types of banks, do not deal directly with the public. Their primary role is to maintain the stability of the financial system, control inflation, and promote economic growth. Each type of bank plays a crucial role in the functioning of the economy. From their humble beginnings as grain lenders in ancient Mesopotamia to their current status as sophisticated institutions shaping the global economy, banks have played a pivotal role in the evolution of human civilization. They have facilitated trade, financed innovation, and provided individuals and businesses with the financial tools to thrive. This journey through the history of banking has highlighted the constant evolution and adaptation of financial institutions in response to changing economic conditions and technological advancements. We've explored the rise of modern banking during the Renaissance, the impact of the Industrial Revolution, the turmoil of the 20th century, and the transformative effects of the digital revolution. Understanding the workings of banks and their impact on our lives is crucial for making informed financial decisions and navigating the complexities of the modern economy. It's essential for engaging in meaningful discussions about the future of finance. Did you find this deep dive into the world of banking insightful? We hope this exploration has sparked your curiosity about the fascinating and ever-evolving world of finance. If you're eager to learn more about entrepreneurship, economics, and the forces shaping the global economy, be sure to like this video and subscribe to Entrepreneurial Edge. We regularly release new content exploring a wide range of topics relevant to aspiring entrepreneurs, business leaders, and anyone interested in understanding the dynamics of the business world. Join our community of like-minded individuals passionate about knowledge and innovation. Don't forget to hit the notification bell to stay updated on our latest releases. Let's continue to learn, grow, and explore the exciting world of business together.